What even are stocks and how can they make you money? Stocks are essentially just a really small piece of a company. For example, one Amazon share is essentially 100 millionth of a percent of Amazon. There are also ETFs that often track many different companies' values all at once. One really popular example is VOO, VOO, and that tracks the S&P 500 index. You can see here this is the top 25 companies in the S&P 500, but there's 500 in total, and they're some of the biggest companies in the US. People buy stocks and companies because they believe that they're going to rise over the long term. This happens for a lot of different reasons, such as the company growing and innovating and selling more, but also inflation boosts prices and profits for that matter. You can see here that the total US stock market has grown 374% since 2001. In the short term, markets can be chaotic. Emotions, news, and hype makes prices swing wildly, and so they're not always matching a company's true worth. This is why the stock market is often considered inefficient in the short term. Over the long term, the stock market gets much smarter. True value shows as the companies report their earnings over and over and continue to grow. The stock price adjusts to reality and the market becomes efficient. For example, Google trends upwards and it's up over 170% in the last 5 years, but over the last month it's down 10%. Despite what people may want you to think on here, investing isn't about getting rich quickly, it's a marathon. Research, stay patient, and think long term.